I'll go into soapbox. So basically, I was thinking along the same lines. Demographic change is probably underrated. Just thinking about, like, I mentioned 10 million new accounts opened for the first time, like first-time investors this year. Another 10 million last year. So this year will probably finish even higher. You have 25 million new people in the market, give or take, let's say. They have very different attitudes about what to invest in and why than my generation, older generations. There are going to be a lot of puzzling things that go on in the markets, I feel like, over the next 5-10 years, where the answer is just going to be very simple. This is a new generation. It's like the demography. Same thing with housing. Ben wrote about housing trends and the role that demography plays. He basically explained why demographics are a bigger force in the housing market than most other things. And he's been saying this for years. I think
he predicted this in 2018.
Yeah, a listener emailed us saying, like, and this is funny. This is like the 5th time we've had somebody email us saying that I just found you guys. I'm listening to your podcast in order. So, okay.
There's a lot of bad takes in there too. Then.
Yeah, tons. But Ben in 2018 spoke about this. So kudos to Ben.
You guys are like the Simpsons. You know they predict things too.
So I love that chart that he had showing how many 30-somethings now. So this is the 10 most common ages in America, and he got this from the U.S. Census. In 2010, the most common age in America was 50.
Wow.
And in 2020, it was 29.
But look, it was 50 and 49 and 48 and 47, 46 in 2010.
Those are in the top 10.
Now it's 29, 30, 28, 7. I mean, this matters a lot.
Move to the suburbs, it's the question was always going to be, I mean, I was a Philly downtown person, and the question was, we had our 2 kids. It's like, are people going to move to the suburbs? And everyone said, no, we're going to stay in the city. We're going to stay in the city. We were a little early, like 4 years ago, moving to the suburbs, but I think it's the course of life. You go out to the suburbs.
Amelia just moved to the suburbs of Brooklyn.
Yeah, I'm in Brooklyn Heights now, guys. I'm basically in the suburbs. It's like a family. Everyone has a family.
The strollers and dogs.
Strollers and dogs everywhere.
We did it at like 31, and I remember at 25, nobody was moving. Like we were up Upper East Side Manhattan. We had a huge group of friends, and people, like, slowly you started to see people trickle away. And then I think 2008, the financial crisis, everybody's just like, I don't care about Broadway shows anymore. I got to get out of here. I got to go get a house.
Yeah.
And, so I think that's going to be a major change is suburbanization, and the pandemic probably just sped something up that would have already happened.
But on the financial crisis, right? So the people that have graduated just around when the financial crisis happened, they're finally at the point where they've accumulated enough wealth to buy houses, right? They're in their early 30s, 35, 36.
They're bald.
They're aging. They've seen it all.
They lived through it. Paying people to do their laundry.
They prematurely aged.
Exactly. But I think you add that in, then you add the freeing up of these high-income individuals who can go anywhere, right, with virtual working. Of course there's
that's another huge change.
The pandemic, I think, is still the cause of this, right?
I think they were going to go, but I think, to Jeremy's point, I think they were going to go anyway. And
they were going to go anyway, but I think it expedited. It expedited the process. I mean, my friends, I'm 28. I actually looked to buy a house, looked in Brooklyn Heights, $1.5 million for a 1-bedroom. So
that's a steal.
It may take me a decade to buy that. But
come down to Philly. I mean,
I gotta go. I gotta change.
Philly's a good deal.
Brooklyn Heights is the wrong suburb to buy in.
Yeah.
But it's hot everywhere. I mean, one of my friends is in the market looking, and there was $1 million house. They bid like $50,000 over, no contingencies. The house went for 1.2. I mean, it's a crazy market.
Any part of the country where you could do knowledge work has always been a very strong housing market in the last 10 years. But now you can do knowledge work anywhere, which I think changes things for a lot of like secondary and tertiary areas of the country. So I feel like we're going to ask these questions like what's going on, and most of the time you could just point to demographics, and I think that's going to be a really good answer for a lot of things.
Absolutely.
Who's going next? Amelia.
Yes. I'm up.
Get on the soapbox. What do you got?
Hello. Thanks for having me on the soapbox. So I think a big one, we've touched on this, Bitcoin, crypto. I actually think RIAs should pay less attention to all that noise and other retail investor trends and pay more attention to leverage, the types of buyers that are entering the space. I mean, M&A is rampant. We break news on that every day. But I also think a huge part of it too is the services that you have to offer beyond investment management. I mean, a huge trend in all my meetings is advisors are trying to scale their practice to add on these layers, like we just mentioned, tax and estate planning, on incorporating principles of behavioral finance, education, making sure they're talking to their clients. I mean, they went from being a planner to basically a therapist, right, during the pandemic. So how can they scale their practice to have these services in-house? I mean, the service model has changed. You have to have a value add. I think you have to have something different.
So this is a good point. Like, if you're an advisor and you're like, how do I do crypto for clients?
Yeah.
And then it's like, well, wait a minute. Your clients don't really need that, or they might be interested in that, but you don't even know how to give them good answers on taxes. Like, are you addressing the right issue as a business owner, as an RIA owner? That's a good point.
And I think, loads of RIAs are actually hiring CPAs in-house. It's a need. And I think there's really complicated tax going on right now too. If you don't have a CPA in-house to answer that, they're going to go somewhere else that does.
We just did that this summer. We brought on an accountant. Like,
oh, you did? Wow. See?
So we have two now. In Philadelphia. No,
you're ahead of the game.
For exactly that reason, we surveyed our clients and asked them if we were willing to do tax work for them, would they be interested? And do you remember what the number was?
Like 70 something?
Yeah, it was like
It makes
70 something
sense. How do you
percent.
not consider taxes when you're doing planning, location? Like there's a whole element of designing investment strategies just for tax planning. And I've talked with some tax people about like really being more thoughtful about even creating new strategies tied to that.
Yeah, so I think that's a really good point. All right,
it all ties into planning. And you just put up Kitz's article on this too. This is later on what I'm reading or what I read this week, but this ties into it too. It's how financial planning, it differs for young clients. So this goes into the next gen. So people think like the complicated times are with the retirees or in the baby boomers because they have more life transition events. But if you look at people in their 20s to 40s, what do you have? We move jobs a lot, career changes, people buying houses, having a child, getting married, then maybe getting divorced, then getting remarried, right? There's so many.
Why are you pointing at me?
I'm sorry.
Aggressive.
That laundry. If you don't keep getting that laundry, woman, I'm sorry.
All right, so to sum up, Amelia, CityWire thinks that crypto is bullshit, right?
Not the opinions of the house,
How
the
about-
opinions
has
of
Citi-
Amelia.
So I have the latest CityWire with my friend Carolyn McClanahan on
Hold
the
it
cover.
up.
And we
Thank you.
love Carolyn.
Yes.
Have you guys had a crypto cover yet? Because I feel like that's coming.
We've written about it a lot.
Cover.
Oh, cover. Oh, you want digital? Yeah, we got to do that.
I feel like Tyrone's going to be the crypto cover.
Yeah.
All right.
He's got to be. He's the one.
Jeremy, what's up?
So,
I was just
you
gonna say
mentioned
just-
on-ramp before, by the way.
Yeah, let me just sort of piggyback what she was just saying, that in terms of maybe they should pay less attention to the price, but more attention to the planning and education and being able to incorporate it. Like
That's what we're trying to do.
right. You want to see what your clients hold. Like it's in part of responsibility of the plan to know, like, are they doing stuff? And it's hard to see it today.
Well,
Right?
we could report without giving advice, right? We don't have price targets, but we should be able to if this is your assets, we're delivering a financial plan, this should be part of the plan.
So we invested in on-ramp also. And I had reporters like immediately being like, so you guys recommending crypto? No, but how can we do a financial plan for someone if they have, $500,000 in crypto and I'm pretending it doesn't exist?
Yeah.
Rather than pulling in that data, which is the purpose of on-ramp. Like there may come a time when we're actively allocating. It's not today. That may happen, but right now, the main thing I think financial planners and advisors have to do is be able to give people answers about whatever crypto they have, how it might impact their planning, how the volatility differs from the volatility of their other assets. Like you see it the same way?
Yeah, and they just launched something called the Academy that Wisdom Tree is now producing some content, putting on the Academy. They're going to have a lot of good thought partners, and it's just an education tool so that people can get their heads wrapped around all the different crypto assets, not just Bitcoin and Ether. They have deep dives on a lot of the different assets, and just general good thought pieces on getting educated to help you help your clients. The integration, I think, is useful. We did a press release saying we're working on models with them, and so that we've launched a series of models that people want to understand how get some education on
What
how to
portfolio
include it.
models that include crypto assets, digital
Yes.
assets?
Yeah, Bitcoin and Ether.
Okay, so the RIA, the future, is doing people's taxes and recommending crypto. and hopefully
Yeah,
paying
just get rid of that last part and you're good.
hopefully paying taxes for their clients on the crypto. Okay, Jeremy, you're up.
So one of the things in the factor world is that a lot of the factors are sort of morphing. Like, so, I think one of the things going on is momentum for the last decade. If you were buying a momentum fund, you often thought of it as the FANG trade. They were what's working. And some of the big indexes, like in momentum in particular, only rebalance twice a year. Like the MSCI index is a semi-annual, and all the academics talk about it's like a monthly rebalance. And so it's interesting. They just all loaded up on value just recently.
I don't think investors really want momentum because the ETFs are tiny. And what they're getting from MTUM is like, I don't want to say a bastardized version, but it's certainly not the academic.
The momentum
interpretation
ETF
of
bought
it.
all these value stocks right at the top.
And it's only going to change twice a year.
Well, we don't know if it was the top, but it was not great timing.
I kind of know. I'm on TV telling people it was the top. No, I think
Not the top.
So wait, so what are we thinking changes then as people realize that, or it's just kind of like
Wisdom Tree doesn't have a momentum ETF, do you?
Interesting timing for that. I mean, we did launch something today actually called our Growth in Momentum. So we actually worked with Bill O'Neill is one of the original growth investors and has some really interesting technical analysis stuff.
IBD?
He was the founder of IBD and really was like 50 years ago one of the leading growth investors. And he's got a monthly rebalancing type index that we worked with to bring to market today. But it's,
all right. What's the ticker?
He's not. I don't even think you're allowed. Are you even allowed to say
WGRO.
All right, I'm allowed to say the ticker is the rule. WGRO. You think there's too much fascination with momentum right now, or?
Well, I think one of the things I was going on was just, if for the momentum that they are morphing, you want to think about it in a more updated, dynamic process. But also, I was going to say, I came back to that we started the conversation that we thought there's going to be more of these tremors from the Fed getting more hawkish. So I think things that are a little bit more defensive, like quality, is interesting. Quality has been the one factor that's really lagged this year. I had a chart showing of the factors. It's been a high beta rally, and quality is like the worst. And I mean, there's been like a 30 to 40 point spread between
we have that here.
Between high quality and low quality stocks. And I would say when I look at traditional things that select like Warren Buffett type high return on equity stocks, they're now where they would have been a growth basket before. Like today, they're in the value quadrant of Morningstar.
So I was going to say, what if like what we think of as high quality, what if the businesses are just changing so much that low quality businesses based on like ROIC metrics and whatever, like are the businesses of the future? And I know that sounds very toppy and it's different this time, but what do you think?
I think it's the cyclical rotation story more than anything. And then what got killed during the pandemic is what's rallying. And then you had sort of the banks, the energy, so it is unique to what's going on now.
Not to get too deep into this, but was the interest rate rising killing the growth stock narrative bullshit now that they've Russell 1000 growth is at an all-time high, NASDAQ's back at an all-time high, ARK ETF is rocking again.
Rates fell too though.
Not that much.
Well, we thought they were going to 2%, and now they're back under 1.5%. So,
but they never wanted to.
Right, but the mentality around rates changed really quickly.
Jeremy, what do you think?
It's a narrative that's driving the market, and they do trade. I mean, you do see higher rates. The growth stocks were selling off this year. How much is it tied into just a complete market rotation versus like, is it really? Should that 10-year rising 50 basis points actually cause this huge growth sell-off?
What if
it changes the sentiment?
But what if all of a sudden you're paying 90 times sales for Zoom and Snowflake and Unity and all those names, and now we're getting like 12% earnings growth in Boeing and Caterpillar. And so we're like getting it's more earnings growth than anything else.
You are getting a lot better earnings growth in the value indexes today. I mean, the cyclical indexes are going to show better earnings growth because they were so depressed before.
And they were cheap to begin with.
And
so it's compressed multiples with earnings growth. Like that's a combustible fire.
I always say to people, why not just own both? And they look at me with three heads. I understand you want to overweight one or the other. Okay, that makes sense. But why do we have to choose?
Because you could just buy one fund and own the world in one fund, and then you have nothing fun to do.
That's not fun.
Well, that's true too.
On that though, do you think that, I mean, these are all U.S. companies we're talking about. Do you think quality only works in the U.S. or does it work globally?
I mean, the research tends to show quality's been a global phenomenon. I think and I think quality is cheap globally. When I've looked at some of the indexes we track for quality stocks, usually they're at a premium internationally, like call it a 3, 4, or 5 multiple point premium. Today, an index we have is cheaper than the market. The U.S. one is like cheaper than value indexes, which is
Quality is cheaper than value.
cheaper than the Russell 1000 value, despite having like a profitability number that's higher than the S&P versus
So
like
other
much
than
lower.
GameStop, what are some of the big names in the quality basket right now?
You'll get
AMC.
traditional tech companies. You'll get a Microsoft. You'll get
AMC.
Apple. You'll
I feel like
get
that's like Cisco.
Intel.
Staples.
Michael, what's your soapbox?
We're kind of running late, so why don't we skip my soapbox? It wasn't that interesting anyway.
All right, let's